Hello, everyone, and thanks for joining us today. This promises to be a really great webinar. I'm going to give you a lot of free information that you can begin using as early as today. But before we begin, I'd just like to take one last sound check just to make sure everyone is hearing everything okay. I don't want you to miss any of the information I'm going to be giving you. So just if you could give me a heads up if everything's coming through loud and clear, then we'll begin today's presentation. All right, looks good. Why don't we begin? Thanks once again for joining us today. My name is Primo, and I am the founder and the president of SpecialistTrading.com. And for those of you who haven't attended my webinars before, haven't seen me on FXStreet, just to explain what SpecialistTrading.com is, we're a website that offers unique education and courses in trading the stock, E-mini, and most importantly, you'll see today, the Forex markets. So just to let you know a little bit about myself, I have been actively trading these markets for the past 34 years. I first began my trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I learned a tremendous amount of trading information and tools and methodologies on the floor, and that's what I do with Specialist Trading. I transfer over everything and teach you all of these secrets of a stock exchange specialist, because as I said, I was a specialist, and even though I left the floor in the 90s to continue trading, to manage money, and most recently I've really gotten heavily into teaching in the last 3 to 5 years. And so everything I've learned in my past 34 years, I share with you on my website. And even though my background is in stocks, everything can easily be transferred over into the different markets, and most especially the Forex markets, as you'll see. I'm going to give you some great tips and some great techniques. In fact, today what we're going to learn today is a new and simple way to use candlesticks. Now, I know that a lot of people that trade the Forex markets love to use candlesticks, and they can come in very useful at times, and they're very beneficial. I'm going to show you new and simple ways to use the candlestick, probably ways in which you haven't used before or even thought of. So get out your pencils and paper. We're going to give you a lot of information. But before we do, I ask that you please take a moment to view our disclaimer. As I said, I'm going to give you a lot of information and some performance results. But remember, we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to say that it's been my experience through the webinars I've given that we tend to break up the momentum and tend to kind of falter a little bit if we ask questions during the webinar. So I please ask that you wait till the very end of the presentation to ask any questions. I promise I'll get to each and every one of them. If we happen to run out of time, which I don't think we will, but if we happen to run out of time, I'll give you an email address as well as a phone number where you can contact us to ask any questions concerning what we went over today. Now, I do things a little bit differently than most presenters. I've seen a lot of presenters will spend the majority of the time talking about their product or what they use or how they trade, and then they'll spend maybe 5 or 10 minutes giving out information. I do things the opposite. I'm going to spend the majority of this hour here giving you this information, explaining how you can use it so that you can actually begin using it today if you like. And then I'll spend the last 5 minutes or so talking about my product if you're interested at all. Okay? And remember, once again, if you have any questions, please, I ask that you just wait till the end of the presentation. I'll get to each and every one of them. All right? All right, so why don't we begin? Now, my goal is to teach you how to trade with the specialist edge. As I said, I was a specialist on the floor for a total of 9 years. I was on the floor for 16. But I think my trading was pretty much like most of your trading out there, whether you're advanced or a beginner, because what most traders try to basically do is pick tops and bottoms. And that can work for a while, but ultimately it's really it's a disaster. It's a recipe for disaster because, you know, you'll have 5 or 6 or 7 or 8 or even 9 trades that'll go great, and then it's that last one that will come back and bite you, and you'll basically lose everything you just made. And that's pretty much the way my trading was when I was on the floor. I traded, trying to pick tops and bottoms using the same things I'll be sharing with you, change my way of trading around because I finally learned how to get in sync. It wasn't until I got in contact with a few elite traders on the floor that changed my way of thinking and trading. And really, the edge that these traders had was not about adding more and more tools, about listening to more and more news, about getting more involved in fundamental information or getting more involved in trading rooms and chat rooms. It was the exact opposite. It was more about stripping away these things, which they called noise, and it was really about getting everything as basic as possible and as simple as possible. So, as I said, my goal is to teach you the same edge that was taught to me, and this is the specialist edge. This is what I do in my course, and this is what I'm going to do today, okay? All right, so why don't we begin once again. I will answer the questions at the end of the presentation, not during them. So here's what you're going to learn today. I'm going to give you two edges. The first one is engulfing pattern plus one. We all pretty much know what an engulfing pattern is. We'll go over it in detail, but I'm going to show you a technique I use called engulfing pattern plus one. Then I'm going to share with you my second edge, and this is called Bulbul Bear Bear. These are simple chart patterns, not complicated at all, so you don't have to be a big technician to understand them. And I'll show you how to spot them, how you can find them in any direction and in any time frame using these simple but new ways to use candlesticks. And then I'll show you some very current examples so that you don't feel as if, he gave me the rules, but I really don't know what it looks like. So I'll show you examples of what these actual patterns look like, okay? So as I said, get out your pencils and paper, write questions down, and we can answer them at the very end of the presentation. All right, so our goal here is new ways to look at candlestick patterns. And the candlestick pattern that we're really going to focus on today is the engulfing pattern. So this is probably Candlestick 101. This isn't anything, for those of you who are familiar with candlesticks, this isn't anything where some really advanced candlestick technique or chart pattern or using in different time frames. This is just really basic candlestick pattern of the engulfing pattern. I'm sure most of you have heard of the engulfing pattern. If you haven't, let's just do a slight review. And most students ask me, they go, well, why do we focus on this candlestick pattern, the engulfing pattern? Because there is a high probability that the trend will continue in the direction of the engulfing bar for the next 2 to 5 bars. And the reason we say 2 to 5 bars is because, as I stated, this works in any time frame. So if you're looking at a 5-minute bar, once you see this pattern, you'll see this, the direction most likely will go in that direction for the next 2 to 5 bars of 5-minute bars. If we're looking at monthly bars, it'll be the next 2 to 5 monthly bars, and so on. So there's really no discrepancy as to this can only work in a certain time frame or a certain type of chart. We're really looking for this high probability pattern to continue the trend for the next 2 to 5 bars. So that's a great edge to know, whether you're investing for longer term or whether you're just day trading. All right, so let's just review what a bullish engulfing pattern is. And I'm talking to my students, especially a lot of the new students that have signed up with us. They're really not knowledgeable of engulfing patterns. So I just want to go over this with you, just in case some of you aren't. This is a bullish engulfing pattern, but a lot of students are confused as to what we are engulfing. As you can see here, here is the open, and here is the close. So this is the body of the candle. We're not concerned with the entire range, meaning the entire top of the range and the entire bottom, or the wick, as they're called. We're not really concerned with that. We're concerned with just the body, from where we opened to where we close, because we want this body to totally engulf the previous bar's body, which would be a negative bar, down from open to close. See, many students think that we must engulf the entire range. That is a totally different type of pattern. We're not concerned with that. We're not saying that it doesn't work. We're not saying that it's wrong, but in this particular study, we're really not concerned with engulfing the entire range from top to bottom. So we're only looking at the body of this bar to engulf the body of the other bar, meaning the open or closed body. And that's it. That's what we view and that's what we label an engulfing pattern. Now this is a bullish engulfing pattern, meaning that after seeing this, the next 2 to 5 bars, regardless of what time frame you're looking at, should continue to the upside. And the same concept works to the downside. Once again, for those of you who aren't familiar with engulfing patterns, here is our dark body, meaning that we opened higher and then closed lower. So we have a dark body here. Here is the range of the body. Here is the range from top to bottom. We're not concerned with that. We're only concerned with this dark body engulfing the range of the body of the previous bar, which should have been up. Okay? So it's basically a reversal pattern. That's really all it is. But once again, we're only going to be engulfing the range of the body, not the entire range of the bar from wick to wick. Okay? Because if we see this, once again, there's a high propensity for us to continue in the trend of the engulfing bar. Now, the engulfing bar was down in this case, so for the next 2 to 5 bars, we should be going down or lower for 2 to 5 bars. And just to show you an example of how this works, looking back in hindsight, here's the daily bar of the British pound. Starting back in hindsight, we see that we have a bullish engulfing pattern here. We've engulfed the range of the body from the previous bar, and we see here for the next 3 bars, we went higher. And now we meet with a bearish engulfing pattern where this dark body engulfs the body of the other upward body, and we see we have 2 more down days action. Then we are followed by a series of engulfing bars, and we can see that we rallied even higher. So it's very simple. You see how this pattern is very simple to use and how it can, extend our gains for another 2 to 5 bars. Once again, it works in any time frame. Here's a 60-minute chart of the Canadian dollar. Looking back in hindsight, we see that we had a bearish engulfing pattern here. The dark body engulfed the white body's range, and for the next 3 bars, we went lower on the 60-minute or hourly chart. Then we were met by a series of bullish engulfing pattern bars here, and you see we rallied for the next, roughly about the next 10 bars. We went a little higher and saw a bearish engulfing pattern, and it was down again. So do you see how this works? Very simple. It's a great edge. I'm not going to sit here and tell you that this works 100% of the time because nothing does, but this is a great edge. Now, this is not what we're explaining today. This is just the basics of the candlestick pattern. We're going to show you some more advanced edges which we can add on top of this. All right, so let's go to our first edge. This is where we're going to be teaching you today. This is an edge we use at Specialist Trading. This is something, as I said, you can start using as early as today. All right, now here's our basic bullish engulfing pattern, okay? This is the basic bullish engulfing pattern. We have the open body engulfing the dark body, okay? Now, what we want to do when we see the bullish engulfing pattern +1 is we want to also have one more body that we're engulfing. So in other words, we are not only engulfing the previous bar, but we're engulfing another one, +1. Now, what matters here is not what direction this particular bar is going. So it doesn't matter whether we are an up body or a down body. All that matters is that we have a basic bullish engulfing pattern, and then we also engulf one more, +1. So we basically engulfed 2 bars, the bodies of 2 bars, okay? This is a bullish engulfing pattern +1. Now, once we see that, we should pretty much have a really high probability direction for the market, whatever currency pair we're looking at, to go higher, because we just engulfed 2 bodies instead of 1, 2 ranges of the body. Now let's look at a bearish engulfing pattern +1. We have our standard bearish engulfing pattern. We've engulfed 1 bar. Everything's fine. We have a down body and we have an up body, but then we've also engulfed the previous body. You see here how we did not engulf the range, the high. We're not concerned about that. We're only concerned about engulfing 2 bodies. And also, we're not concerned that this is an up body. It doesn't matter. This could have been down. This could have been, up a little bit or down a little. It doesn't matter. All that matters is that we have 2 basic bodies here that we totally engulf. Okay? Once we find this chart pattern, we will know and notice that we have a high propensity now for the market, whatever currency pair we're looking at, to go lower. This pretty much kicks it into 5th gear now. All right, let's look at some examples of engulfing pattern +1. Here's our first example, the Australian dollar. This is a daily chart looking back, at the Australian dollar. And as we can see here, we have a bullish engulfing pattern +1. Okay, so we have a bullish engulfing pattern +1. Not only did we engulf the previous bar, we also engulfed the bar before that. So, look what happened. In the next roughly 2 months, we went up roughly 900 pips. Now, remember, this is basically just telling you a very good chance of what direction the market will be going in later on. All right, let's look at another example here, the euro dollar. All right, we're looking back in hindsight. What do we notice here? We notice a bearish engulfing pattern, and the bearish engulfing pattern +1, because we just encompassed 2 bodies here. It doesn't matter that they're both upward. We only need the first one to be an up body so that we can have a bearish engulfing pattern, but then the +1, it doesn't matter which direction. And as you can see, we went down 300 pips. And then we're met with another, or actually 2 more bearish engulfing patterns +1, as you can see. And look what happened, 1,000 pips to the downside. So you see, when this pattern is noticed, it pretty much kicks it into 5th gear that there's a high probability that we're really going to continue in that direction for a while. Let's look at a weekly chart, the dollar yen. Okay, pretty much going sideways, but we see here that we have a bullish engulfing pattern +3. Because not only did we engulf this bar here, which really isn't a doji, it's just because it's a weekly bar, but it's pretty much down for about 5 or 10 pips, a lower body. But then we also have 1, 2, 3 bodies prior to that we totally engulfed. All right, so we've engulfed 1, 2, 3 plus. So this should really tell us that there's a strong propensity for the dollar yen to be going higher. As you can see, we went up 800 pips roughly in the next 3 or 4 months. A weekly chart of the Canadian dollar. All right, we're pretty much going sideways. We have a bearish engulfing pattern plus 1. Bearish engulfing pattern right here plus 1 more that we totally engulfed. It looks like we almost engulfed this one, but we really didn't. It's hard to tell in this chart, but we only engulfed a plus 1. As you can see, quick 1,000 pips to the downside. Then we find more as the market went sideways on this weekly chart, but we had another bearish engulfing pattern plus 1, another 700 pips. You see how this works? This is a great chart pattern to tell you the momentum or direction of the market. Here's a monthly chart of the euro yen. Now, obviously, looking back in hindsight, one would say, well, yeah, it was easy to spot that this was going up. But what if you had a tool, what if you had a pattern that was giving you advance notice that the euro yen was really going to be consistently going upward, for the next couple of years? If you were an investor, if you like to have long range investments with the currency pairs, well, you would have seen that we would have had a number of actual bullish engulfing patterns plus 1. Here's our first one right at the bottom. There's another one right here. That's a bullish engulfing pattern plus 2. That's a bullish engulfing pattern plus 1. Another bullish engulfing pattern plus 2. And then ultimately a bullish engulfing pattern plus 1, 6,000 pips. And roughly, this was a long-term investment, but you see how this spots this out for you and tells you the momentum. It really tells you that there's really going to be some propensity for the same direction of these bullish engulfing patterns plus 1 and bearish engulfing patterns. A monthly chart of the Australian dollar, same thing applies. We have a bullish engulfing pattern plus 1. We have a bullish engulfing pattern plus 1 again. We have a bullish engulfing pattern plus 1. And so we made roughly 2,000 pips looking over this past roughly 6 months or so, and then we're met by a bearish engulfing pattern plus 1. Okay, so all of a sudden, this is telling us that we may have a change in trend on the monthly chart of the Australian dollar. And look what happened. Straight to the downside. So you see how the market is telling you in advance a high probability direction move. There's no need, in our opinion, to be listening to news, to be going to obsessive chat rooms and trading rooms, to be so much involved with advanced technical indicators. The market is really very easy. It should be simple. It's us as traders who make it difficult. And that's what was taught to me on the floor, that the reason why most traders lose is not because they have a faulty indicator, they were given faulty information, or they blame it on market manipulators. It's because we're getting in our own way by overcomplicating and over-structuring things. It's the easiest thing in the world to complicate your trading, but it's the most difficult thing in the world to simplify it. So my goal is to simplify things for you and give you this edge that was taught to me on the floor. All right, let's look at the second edge now. I've given you the first edge, which was the bullish engulfing pattern plus 1. Now this is our next edge. This is called bull, bull, bear, bear. This is once again has to do, it's constructed or formulated off of the basic candlestick charts and the basic pattern of the bullish engulfing patterns. But we just kind of kick it up a notch here, and we're looking at something entirely different now. This is an entirely different pattern, but one just as accessible and just as valuable as the prior edge we just gave you. This is called bull, bull, bear, bear. All right, let's review once again. We're looking at a basic bullish engulfing pattern. Both of these techniques I'm sharing with you today are based off of a bullish engulfing pattern or a bearish engulfing pattern. Once again, this is your standard bullish engulfing pattern. We're not concerned with engulfing the entire range from top to bottom. We're only concerned with engulfing the body of the previous down bar. All right, this will have a high probability for us to increase upwards, have the trend continue to go for the next 2 to 5 bars, regardless of what time frame. Okay? This is a bull-bull pattern. What that means is that you basically have a open body or an up range engulfing another up range. Okay? That's why we call it bull-bull. So before, in the bearish engulfing pattern, let me just go backwards for you, we were engulfing a down day. Now we are engulfing an up day or an up bar. All right? Or it could be a 5-minute bar, or it could be a monthly bar or a weekly bar. So this is what we are doing. Now, these are real-time examples that we're showing you. So there's a constant. You see these a lot, not as much as the bullish engulfing pattern plus one or bearish engulfing pattern plus one, but you do see these from time to time. All right. With this as well, there's a high propensity for you now to continue to go in that direction. We're kicking it up a notch. We're going to be in fifth year. That momentum should really continue in that direction, longer than 2 to 5 bars. All right. Let's review what a bearish engulfing pattern is. We have a downward day here, or a downward bar, and we totally engulf the range from open to close of the previous upward bar. So we're not concerned about engulfing the range from top to bottom. We're only concerned with the range of the bar, of the open to close. So that's your standard bearish engulfing pattern. You should have 2 to 5 more bars of downward movement. Now, what we're looking for in bear-bear pattern is a down bar that totally engulfs another down bar body. Okay? See how that works? We're not concerned with engulfing an upward day. This is have a reversal. We're having 2 negative bars or downward bars. All right? So this is what we're doing. We should now have a real high propensity to go lower. All right? These are real strong edges. Remember, we're not saying that these are strategies. These are not trading methodologies. These are just techniques and edges that you can put and construct a strategy off of. But once you apply the money management and entry techniques and stop losses and exit techniques, okay, which we also apply for you as well. All right, now let's look at some bull, bear examples. Once again, these are examples that we took off the charts. Also, these are also not as prevalent as the bullish engulfing patterns plus one or the bearish engulfing. You won't see these as much, but they're just as valuable. Here's a weekly chart of the British pound. Okay, as you can see, we were going up and then we fell out of bed, but then guess what? We have a bull pattern right here, a weekly chart. The next couple of months, we went up roughly about 1,000 pips. All signaled before any news came out, before we had to be told in some trading room that we thought the British pound was bottoming or topping out. The market was telling us everything we needed to know. Australian dollar, looking at this weekly, okay? Kind of going sideways on this weekly chart. We see you have a bear pattern right here. This may look like it's a doji, but no, we're not concerned with dojis or bars that open and close on the same bar. We're not concerned with that. Just because it's a weekly bar and the way this chart is constructed, you can't really tell, but it's actually a down body, meaning that we opened and then closed lower about 5 to 10 pips. That's why it's not really noticeable. But this is a down body or a down bar, a dark bar, which was engulfed by another one. All right, so this is a weekly chart of the Australian dollar. Look what happened in the next 3 months or so, 3,000 pips to the downside. Once again, all without the aid of having to try and figure out what's going on in the news or what's going on in the world. The market tells you everything you need to know. Really don't waste your time, and most importantly, don't waste your money on these things which are labeled as services. You should really spend your time and education and money, and money on education so that you learn how to spot these things. Here's a 60-minute chart. Once again, these work in any time frame, in any direction of the dollar-yen. Okay, as you can see here, we have a really nice bull pattern here. We've actually engulfed. You can have a bull plus a bullish engulfing pattern plus 3. But we're just looking at the bull right now on a 60-minute chart, and a nice quick 80 pip move here. All right, just to show you that this works in any time frame, in any direction. How about a monthly chart, the Australian dollar? Well, as you can see back in hindsight, while we were going straight down in this monthly chart, the Australian dollar, so most people would say, well, yeah, it's easy to see that you should have been short because, we were going straight down, and in hindsight, it's easy to see that. Well, what if we were looking at the very top here before we fell out of bed? The market was telling us before we fell out of bed 400 pips that, hey, I'm telling you right now, you should be looking to go short or looking for short setups because I'm giving you signals better than anything else can give you signals that we're headed in a downward direction. We went down a quick 400 pips, and then later on, I gave you another signal that we're going even lower, that the bottom hasn't been reached yet, and we went down another 1,200 pips on this monthly chart. Monthly chart of the British pound. Here's a buy signal. Okay, we totally engulfed the previous bar, which was also an up bar. As you can see, 1,200 pips in this monthly chart here. Euro yen on a daily chart. Okay, it looks like it's a doji, but it's really not. We really opened higher and closed lower, so it's a negative bar. We engulf the range. Remember, not the range from top to bottom. We're not concerned with that. We're only concerned about engulfing the body from open to close, and this range from open to close engulfs. So it's a bear right here, as you can see, 400 pips in the next week or so. 60-minute chart of the Australian dollar. Okay, if you like to day trade or like to, just have quick position trades in the currency pairs. As we look, we see here that the market has already started to move up on an hourly bar chart here, but still we're getting signals telling us that we have not topped out. Many times people will be in trading rooms or chat rooms and they say, well, the Australian dollar just had a nice move. I think we should short it here. It's meeting resistance. There's some news coming out. Someone's going to be speaking. Don't concern yourself with these things. Just look what the chart's telling you. The chart was telling us we had a nice rally, and guess what? We're most likely going to even go higher, so we haven't topped out yet. And there's another, even on a small basis, there's still some more room to go to the upside. Even though it was only 50 pips, the market was telling you, don't short me yet. All right? And even on a weekly basis, we have some real strong downward movement in the weekly chart of the Canadian dollar. Someone would say, well, you know what? The guy who I follow, who I have subscribed to, who I spend $200 a month on, tells me that we've bottomed out in the Canadian dollar. So I should purchase it. I think I'm going to buy it here. We're meeting some really nice support, and plus all the indicators are telling me that we are going to go higher, and this is the bottom here. We've never gotten this low before, so I think I'm going to buy. Well, what was the actual thing you should be listening to, the Canadian dollar telling you? It's telling you that we had more room to the downside. There was a bear pattern here, plus a bear plus one. So you had a double whammy of two of the signals of two of these techniques staring you in the face, telling you that most likely, not promising and not guaranteeing, but most likely we're headed lower, 1,500 pips lower, as a matter of fact. So do you see how much I want to stress to you that was stressed upon me? My trading went sideways for years until these elite traders explained to me and said, don't waste your time on things that for some reason we've been taught are important, such as news, such as overuse of indicators, such as trading in chat rooms. Save your money, save your time, and learn to listen, educate yourself on the only thing you should be listening to, which is the market you're trading. All right, so let's go over some quick points to remember. Remember, these are not strategies. All right, probably the biggest trouble I have, especially with my new students, is that their eyes light up when they see these tools and these edges, and all of a sudden they start to say, boy, my God, I got a bear on a 15-minute chart, or I got a engulfing pattern plus one on an hourly chart. I'm going to buy at the market. This is not a strategy. It's not a system. It's not a trading technique. What these are edges that you will construct a strategy around. This is telling you, basically, that you should use these as momentum tools. So both these patterns are best used as momentum tools or directional tools. So if you see a bull or a bullish engulfing pattern plus one, you know that there's a high probability that whatever currency pair you're looking at where you saw that pattern is going to be going higher. So therefore now the second step is now to look for some structure, some type of setup, some type of entry point or entry technique coupled with money management, coupled with an exit technique, coupled with a way to protect your profits should all be applied to that. These should all be pieces of the puzzle. But it all starts by finding out the momentum or direction of the currency pair, okay? So remember, these are not strategies. I don't want you just to come out today and say, okay, wow, I saw one today on a 10-minute chart, I'm going to go buy it. It's not the way it works, all right? These are momentum tools. Now, the engulfing pattern plus one are more prevalent than the bull, bear patterns. You see a lot more engulfing patterns plus one or bearish engulfing patterns plus one. So just be aware of that. You'll still see the bull and bear from time to time, but you don't see as many of them because of the difficulty of that particular pattern. You have to have, on a bull, you have to see the currency pair open and close higher. Then on the next bar, it's got to open lower and then close higher again. So it's not as prevalent, it's not as common, but when you do see them, you should take advantage of them as a directional tool or a momentum tool. Remember, these can be applied to any time frame and in any direction. There's no need to only think that you see them on a weekly chart because I showed you a bunch of weekly examples, or on a daily chart, or on a 5-minute chart. Okay. Now, the smaller time frame you go, you'd probably see a lot more, but you're probably going to get whipsawed a lot because you'll increase maybe for 2 to 20 bars, but then it may change direction. So I would suggest if you're going to use these as directional tools to use them for no less than a 30 or 60-minute time frame. Okay? That's where you'll get the best out of this, the most advantage and most beneficial to your trading and finding out the direction. Okay? All right, so let's recap. I gave you two edges. The first one is our engulfing pattern plus one. This is your standard bullish or bearish engulfing pattern, but we're also going to be engulfing one more bar chart, okay, so bar prior to that. So we're engulfing the standard prior bar and then one more. That's where we get the plus one. Now on the plus one, the extra bar that we're engulfing doesn't matter whether it's up or down, okay? As long as we have our basic bullish engulfing pattern or bearish engulfing pattern, it doesn't matter what the other bar is, what the third bar is, okay? Then we also gave you edge number two. This is bull, bull, bear, bear. This is your standard bullish or bearish engulfing pattern, but instead of having a reversal pattern, we're basically engulfing the exact same bar that the engulfing pattern is. In other words, if we have an open bar to the upside, we need to also engulf that to the upside. If we have a downward bar to the downside, we need to engulf that with the next bar being down as well. These are not as common. I wouldn't say they're rare. You still see them at the examples I showed you, but they're not as common as edge number one. And then lastly, I showed you current examples of how to actually spot them and how you see how the success rate is with them. Now remember, these are not strategies, and they're not going to work 100% of the time. So, you know, I'm not going to sit here and tell you, like maybe another speaker would say, how these are perfect ways to make tons of money. No, they're great tools to help you in an edge, okay, to help you gain that edge. That specialist edge is what I try to teach you. These are edges that most people don't spot, most people don't use, and this is what I try to teach in my classes and my courses. All right, so this is why I'm inviting you and spend the next couple of minutes just showing you and sharing you a little bit of what I do. This is my site, specialisttrading.com. As you can see, I offer three separate but distinct courses. I have a stock trading course, I have an E-mini course, and I also have a Forex course, okay? Each course comes with upwards of 10 separate and different strategies for trading those markets. You know, you can have strategies for day trading, strategies for swing trading, or strategies just for position overnight trading. We have a number of strategies to fit your style and to fit your personality. Now, here's what you receive if you decide to become a member of my website, Specialist Trading. Continued detailed instruction, just as you experienced today, the way I teach, the way I like to really make sure that you're understanding the concept fully. As I said, numerous Forex strategies. We have upwards of 10 great Forex strategies along with techniques. Now, what I shared with you today is not a strategy. These are just techniques and edges. We have numerous edges and techniques as well as strategies for you. We give you continuous updates and signals. Now, the reason why we give updates and signals are not so you can simply just take the trade and then walk away. I want you to learn how to spot these on your own. Remember, my goal is to teach you how to trade with this edge. But I want to make sure that you're checking your work. So we furnish with updates and signals so that you'll see if you are in line with what we are seeing after myself trading these for the past 34 years. We have weekly webinars where we go over that week's signals and we go over any questions that students may have. Everything is archived so you can study at your own pace, at your own leisure. And once again, if you decide to become a member of Specialist Trading, this is a lifetime membership. I really give you so much information, so many tools, and so much detailed instruction, hands-on instruction, that it's really not something you should be getting on a month-to-month subscription basis. So once you decide to become a member, you're a member for life. I make my livelihood off of trading. I've been trading for 34 years. I have no plans to quit now. So if you should decide to join, you'll be trading right alongside with me, and I'll be trading right alongside with you for life. Now, here's some current examples of actual signals that we did have based off our bullish engulfing patterns. This is a strategy called, one of our best strategies, called strategy number 5. These were actual signals that we gave to our members. We furnish on a nightly basis when they do occur. These were actual signals and actual trades that we took, and many of our members took as well. So once you become a member, you're going to receive these signals, but remember, they're used to test and see if you are in line with the strategy that we're teaching. Here's a signal that we had just the beginning of this month in the dollar-yen. We made a quick 95 pip. Now, my courses run anywhere from $3,000 to $5,000, and we realize that can be a lot of money for many students. So what we've done recently is that we've created these individual courses. Rather than having you become a member where you get upwards of 10 specific trading strategies, we are designing a package where you can purchase one specific strategy. So we're offering you one of our best strategies built off of what I shared with you today. This is strategy number 5. Should you decide to purchase just this one strategy alone, which I showed you the foundation for today, you will continue to get detailed instruction, 2 videos coming along with this. We'll give you all the entries, all the exits, and all the stops, all these advanced techniques. You're also going to get 1-year trade signal alerts, so these will be issued to you for a year so you can check to make sure that you fully understand this. You have PDFs of the rules, and as well you have personal email access to myself. So you can email me at all hours of the night if you'd like, and I'll get back to you just as soon as possible. Now this Forex Swing Trader course usually lasts, or I should say costs $495. Special FXStreet price, we're reducing it $100 down to $395. Okay? For a limited time only. So if you're interested, as we go to our question portion of the presentation, here's where you contact us. You can contact us and call this number or reach my trading associate, Brett M. at specialisttrading.com. Okay? Lastly, if you just want to purchase online, if you don't want to talk to anyone, if you already think this is what you want, you can go to this website where we sell all of our individual strategies. Okay, I promised I would spend the last 15 minutes or so answering any questions. So I know a lot of you, as I noticed, were actually talking or asking questions during the presentation. I'm sorry, but remember, I don't like to break up the presentation, and many times if you just stay on course, you'll see that your question is answered in the next slide. I'll try and take as many questions as possible. Michael says, on +1 pattern, is there any limit? In other words, is +3 still okay? And do you still use the buy-sell line with these patterns? Okay, Michael, first of all, yes, +3 is fine. In other words, if you have your basic +1 engulfing pattern, can you also engulf another one that fits into the same scenario or the format? Yes, in fact, the more actually, the better, because what the market is doing is kind of squeezing up. It's kind of like a spring getting ready to explode. So once again, this is not a strategy. We're not telling you that it's going to work and then it's going to go straight up or straight down, but this is telling you that there's probably going to be a very large move coming. So actually, the more you get, if you had a engulfing pattern +5 or +10, which I don't think I've ever seen, but say you did, that would be a really, really nice signal that something explosive is most likely going to happen. Now, when you talk about the buy-sell line, yes, the buy-sell line will also increase your chances for success. The buy-sell line is simply using the 50-period simple moving average. So once you apply more and more edges, more and more tools, you will also increase your odds for success. But today, in today's presentation, we didn't really want to go over those other edges. We just wanted to show you some really nice directional tools and new and different ways to use the candlestick charts. Okay? So I hope that answers a lot of your questions about the 50-period simple moving average. How high are the probabilities? Well, that's a good question. Remember, these are not systems, they're not strategies, so there's never really been any back test. But I can just tell you, I've been using these techniques since they were taught to me for about the last 25 years. So I continue to still use them. I look at them. I don't trade off of them, meaning that if I see one, I don't buy or sell automatically. I have to apply some structure. I have to apply my trading strategy. But once I see those, I know that I have a very high probability trading strategy setup. I still have to find the setup bars for my trading strategy, though. And this, once again, is what we teach you and what we offer you. As we told you with the individual courses, we show you all of the setups, where to get in, where to get out. Okay? Jack asks, do you have only these 2 candlestick patterns? We use the candlestick patterns. There are others, but these are the basic ones in which we look at. The engulfing pattern is really a high probability pattern. Don't use a lot of the other. From time to time, we'll look at dojis. From time to time, shooting stars. But I really, there's so many other things. I think that especially Forex traders rely too much on candlestick patterns. They're a great tool, but remember, they're not the end of the world. There's so many other things you can look at that the market is giving you tools for. So even though we use candlesticks, not all of our strategies rely on them. Okay? Chris says, does the majority of your income come from trading the markets or selling trading education? Well, I stated about 5 minutes ago, I make my livelihood from trading, as I have for the past 34 years. From teaching is just really a drop in the bucket. But I've been trading for 34 years, so whether you want to use that or not, it doesn't really matter. I trade stocks, futures, and the Forex market. So it's up to you how you want to take that information. But it doesn't really matter, because even if you look at other educators, Many of them aren't trading, and many of them are. It doesn't matter, just as long as you get something good from it. If you feel that this isn't your cup of tea, then that's fine. No one's going to try and stress on you that you have to do that. Okay. Menno asks, bull only possible on start of the week? No, because that's only if you're looking at a bullish engulfing, or a weekly chart. You can see a bull pattern on a 60-minute chart, as I showed you, or on a 15-minute chart, a 30-minute chart if you want. So there's no reason why it has to be the beginning of the week. That's only if you're looking at weekly bars. We're not concerned with that. We're only concerned with seeing this pattern. Remember, keep things simple. Don't try to overcomplicate it by thinking it has to be in a certain time of the week or a certain day or a certain direction. As long as you just see it, that's fine. We don't really care what day of the week is. We don't care what direction it is. It's the market trying to tell us something. That's all we should be listening to, okay? Let's see. Let's go to the next one. What time frame is more accurate? I can't tell you exactly that there's one that's more accurate than another. You saw a lot of time frames will work just fine. I would say the time frames that are the easiest to spot these are when you go out more. In other words, when you start looking at anything past daily bars, daily, weekly, monthly. Okay, you're going to see a lot possibly on a small time frame, but I wouldn't say that they're very high probability trades because of the noise intraday. So I personally look at these from day bars on. But that's not to say that a lot of our students use them on 60-minute charts or 4-hour charts. They're fine that way. Okay? It's really up to you. Once again, you've got this information. There's nothing that you're being charged, or nothing that you're having to pay for. Go ahead and use it and explore it yourself. Go and see what time frame works best for you. It's yours to keep. How are signals sent? Does each strategy have its own signals? Which is your most successful strategy? Okay, Milo, it's a good question. Strategies are sent through email. At the end of the day, we trade the U.S. hours, and we trade our signals off the U.S. hours. We track only 7 of the top currency pairs, and we give you signals whenever they occur. Roughly, we get around 2 to 4 signals a week. Okay? Our best strategy so far has been the one which we currently were talking about. Just to go back here, this is strategy number 5. All right? This is also based off of a candlestick pattern. Extremely simple, but extremely powerful. Okay, the examples I showed you earlier where we made so many pips and whatever, that was all using strategy number 5. So it's a really great strategy, and I currently trade it, and it's probably one of our best performers. It's, I'm not going to tell you that it has, 100% winners. I would say more likely, closer to about, at this point, about 70%. And we keep our losses very small because we employ money management where we can actually raise our stops to unchanged after we reach certain priorities. So this is all that's taught you in the course. This is all on sale for $3.95. Okay. Now what we're doing also is we're in the process of constructing a special page. So if you're not able to receive email alerts, you can simply log on and see that there are go to a website and log on and see that there are signals in particular currency pairs. Next question, how much notice do you take of support and resistance lines? That's a very good question, Michael, and I would probably say 0. As I said, I've been trading for years, and the only problem with support and resistance lines is that they're subjective. So you can see one person and say, oh, this is a top resistance, and you can see another one saying, no, we haven't reached resistance, the real resistance is up here, and vice versa with support. So, it's very subjective. And then once you get there, what do you do with it? There's too much thought involved where you can second guess, where you can, take yourself out of the game by trying to overthink it. And trading, remember, is very simple. It should be as simple as possible. Where you see a pattern, you know that you go long. Where you see a pattern, you know that you go short. Or where you see an indicator to do something, it tells you what to do. You shouldn't have to sit there and try and say, well, how come they say this is resistance, but this guy says it's support, and vice versa. So I try to stay away from subjective things. I have personally never found any high probability using support and resistance, or using news, or using an overabundance of indicators. So most of our strategies only have 1 or 2 indicators at most. We're just looking at certain ways in which to read the market. Remember, keep it simple. Don't waste your energy, especially your money, on these things for some reason. I don't really understand why most traders feel they have to buy all these programs, be trading a multitude of markets, have 20 phones in front of them, 20 screens, watching every commentator on TV, subscribing to 20 different trading rooms, chat rooms. I mean, as I said, it's the most simplest thing in the world to complicate your trading. It's the difficult thing in the world to simplify it. But once you do, you'll start to see that level of consistency. So this is what I teach, and this is what I really try to stress on all of my students, whether they're advanced or beginners. Okay? Let's see. Suppose you have conflicting patterns of different time frames. Bullish pattern on daily, bearish pattern on 60. That's a very good question, Ethan. Once again, I don't concern myself with looking at overlapping time frames. I found no consistency in that method. I know a lot of traders swear by it. Even some of our students swear by it. They'll say, Steve, you got a great strategy number 1 buy signal on the hourly chart, but on the daily chart, you have a great strategy number 3 sell signal. What I tell them is that, listen, I only look at the chart time frame in which I'm trading. If I have a signal on the hourly chart and that's the time frame I want to trade, I only take that signal for what it's worth. I don't concern myself, once again, with overcomplicating my trading to try and look for outside sources to tell me what to do. I don't concern what the trend is on a daily bar to tell me what I can do on an hourly bar. All right? So that's what works for me. I know a lot of students swear by looking at higher time frames or higher signals to tell them what to do on a lower. If that works, that's fine. In my 34 years, I've not found any evidence to see that consistently works for me. Okay? It's just my own opinion. Can the engulfing pattern have longer tails than the body of the strategy, or will it still work? Yes, remember, we're not concerned with the tail or the wick. We're not concerned with any of that. All we're concerned with is if the engulfing bar totally engulfs the previous bar. Now remember, once again, this is not a strategy, so we don't have to be that concerned about how long the tail is. Once we start getting into strategies and the trading techniques where we enter and where we exit, then we may have to be concerned with how long the bar is or so, because we may be taking ourselves out of the trade by having too long of a range. But these two techniques I shared with you today are not telling you when to enter and where to exit. We're just showing you that there's a high probability for the trend to continue in that direction. So for that reason alone, we don't really need to concern ourselves with the tail or with the wick, okay? Euro yen bullish engulfing pattern +1 on daily signals yesterday. Would you agree? Yeah, you know what? I don't have the charts in front of me, Dan, but I believe I saw one yesterday. Yeah, and you know what? This is a very good homework assignment for all of you. Why don't you go to the euro yen yesterday and look on a daily chart and see if there was any type of not trading signal, but any type of indication of these edges that I shared with you today. Okay. Thanks. It was funny. I believe yesterday I saw one. I was trying to give myself a mental note to actually have the chart posted and ready for today, but I got too caught up trading. Steve, will there be another webinar on the 50-period simple moving average strategy? Give more details on how to enter, manage, trade, and stuff. Yes, I give webinars each month for FXStreet, and I constantly am giving you new and different information. And in the future, I will be giving more and more different webinars showing different things. So stay tuned. And once again, you can always email my associate Brett M at specialisttrading.com. From time to time, he may have some archive videos where he can send out to you, so you don't have to wait a full month, or give you tons of information where you can get that for free. Okay. Also, give him a call at 310-844-7220. English says, I bought strategy number 5, but it made no mention of the two edges you just referred to. Is that an added feature? That is an added feature, yes, but what I stated was strategy number 5 is based off of a engulfing pattern, as you well know, English. So it's not based off of these two edges. If you see these edges along with that, that's fine, but these are just simply two edges to tell you directional movement. And then once you see these, say you saw this edge where you had an upward movement using a bear or a bull, I should say, and then 10 bars later you saw a strategy number 5 signal, well, that would really have a high probability that the strategy number 5 signal is going to be profitable. So once again, the strategy number 5, as I mentioned, is built off of engulfing patterns, but not built off of these specific edges, okay? Tyler, this is not work. Don't come to us if you lose your money. I think this all says zero reading testing. Whatever Tyler says, you can, judge for yourself. I don't know what he's talking about. All these DVD systems, it says in little letters and fancy language, this does not work, but don't come to see us if you lose your money. I think that says it all. Well, basically, that's a requirement that we must state, so it's up to you. Once again, you can tell in our sincerity by how we want to, give you the information. If I came here and just talked about a program without giving you any information, you could see that, we're just trying to sell. But every presentation I give you tons of free information. I'm getting the wrap-up signal here, so I'm being told I have to get off for the next one. Once again, any questions on how to use this free information I've given you or all the other free information we give you, please just call our number here, or you can email my associate, Brett M. at specialisttrading.com. Thank you so much. Hope this works for you. If you have any questions, email us, and we'll sure to get you right back on the track, okay? Have a great day. We'll talk to you later. Bye-bye.